Morning, Chris. How you doing?
Good morning, buddy. I'm great. How are you?
I'm doing excellent. This is Brian Jones. I'm here with Chris Hood, professional options trader, world's most interesting man.
No, well, world's most interesting man with 2 extra stripes on his purple belt. So
Congratulations, man. Congratulations. That's
yeah, no, thanks, man. I feel much better. You know, the one thing they always say belts don't matter, but it's actually really cool just to get that motivation to, move forward,
absolutely. Absolutely. It's nice to have a pat on the back, a recognition.
Yeah.
You're getting better, but it's nice when somebody, like says, hey,
well done, man. Yeah, well, I've set records at both white and blue belt for the longest time. They used to call me Zebra with the white belt. I think I was white belt for 12 years, and I think I was a blue belt for another 11. So, purple belt's been fast.
You're very seasoned. You're seasoned white belt and a seasoned blue belt.
Absolutely, man. How are you doing?
I'm good. I'm just doing all this stuff, man. This has been a crunch time for me a little bit. So just trying to get everything done but otherwise I can't complain.
Awesome, man. Awesome. Well, at least the market's looking up today. I think we might have passed through the rough period. So
my positions are like, it's like they're like rising from the dead, like I had a few on there. I was like,
your book is called Lazarus.
I put some things on a little too early, took that. I'll probably get out of some of those when they're a little profitable, we'll replace them with something a little bit longer duration. But
the one thing that's hard in the market is the timing, right? Everything is timing. And I'm a big believer that you'll never get the timing 100% right. You're going to have to play a game as a trader of either being permanently in the market, you've got to be in some way, or you can play strategic and then miss some of the opportunities. That's pretty much the trade-off. I think a lot of people try and catch every move. And that's where problems start to come in, because you start to overtrade. And you also start to misinterpret things, right? You start thinking a move is there when it's not. I mean, we discussed this yesterday in that webinar. When you start looking at some of the early signs of things, it gives you a sense. It doesn't tell you exactly when things are going to change, but it gives you an idea of what to look for when things are changing, enough to justify moving on. Often it's a question of things are getting less worse as opposed to things are getting better. That's the way that you got to face the market. So things are definitely getting less worse as opposed to getting, terrible this morning. So maybe this is the rally. Maybe this is where the starts to happen. I haven't got a lot of signals this morning so far, but I think that there will be some over the next day or two. If we can continue with days like today, as far as the futures are concerned, we should see quite a nice rally for the next 2 weeks, hopefully.
It looks like a pretty strong open. I think.
Yeah, it looks good. And, the thing is, everyone might have seen a bit of an overreaction when it comes to the COVID thing. And, you had the Fed coming in saying, we're going to speed up the fact that we're not going to be purchasing. So their tapering is going to be faster than expected. I don't think those are surprises. I'll share my screen and we can have a look at a couple of things. We did do it yesterday a little bit, but I think the people who didn't join in yesterday, one of the things you always want to watch is these are the signs to look for, right? So here we have the put call ratio. So this is what we look for sentiment, right? So put call ratio pretty much means when more people are buying puts, it takes away the calls, right? So generally speaking, we have people buying calls more than we have them buying puts. But when puts start to increase, so when those numbers start to balance off, we land up having a sentiment that's fearful, all right? Now, remember what happens in the market. Big players don't necessarily just liquidate stock, all right? They buy puts to hedge themselves. So when we start seeing rises in the put-call ratio, it means fear is starting to rise. And this is an inverted graph. So when we see the market sitting at these bottom levels in this red zone, this is where you need to be careful, right? So if we draw the line on here, if we go back to the 2nd of September, and I'm now on this graph at the bottom, you can see our price extension indicators were printing. We had a complete optimistic view of the market here when it sits between these red lines. And what did we see once we hit the bottom here? We saw this massive short this decline that we had over here, right? And that was between the 2nd of September and the 4th of October, this huge move that we had here. Then on the 4th of October, we saw the price extension indicators printing again to the upside. And we saw this rally that went all the way from the 4th of October to the 5th of November. So sort of coming down from above the 10-day moving average down here into the zone. And then we start going back to the upside. So the key thing now is to watch the 10-day moving average because it's rising. So we could see this movement going up and down, up and down, up and down. But when the 10-day moving average gets up here into this area, which is the indication of a potential reversal to the downside, a reversal to the upside, we could see a very strong rally back down. All right. So we start seeing another rally like this to maybe new highs, end of January, somewhere around there. And then we have the mother of all corrections happening once we've got this back down into this area down here. Once this little black dot comes back down here, we could see a major reversal. So play the signals. Don't try and read the news. You know, I don't think the news helps it anyway. But understanding which indicators give you an idea of what's to come. You can see on the bottom left, we don't have any squeezes, but we do have aggressive signals. So we could start building positions here. At this point, we could start building for a reclaim of the high and possibly move on to new highs. So this might be the time, you know, this might be the opportunity that we've been waiting for, but hopefully this hasn't shocked too many people out of the market or resulted in margin calls. I know that there were quite a few people that I know of that got margin calls towards the end of last week because of these 4 candles, right? So you've still got to trade carefully, but you've got to have a system in place to look for these things. Otherwise, it's just random, and that's where problems come in.
Yeah, some of my positions took a couple of groin shots, but they're recovering.
Well, you know that there are some martial arts that condition that area of the body, right?
So I like to put on bad trades just to condition myself to take those.
Give yourself that emotional resilience, right?
Yeah. It's like I'm gonna put on this loser for potentially.
So a lot of the times, particularly retail guys, don't have a system of assessing the external market. So they look at an individual stock without really looking at, well, what the conditions are of the market underneath. And remember, when the market falls, everything falls. You know, when we had those big red days over here, I think only Apple and Tesla were the only 2 stocks that were showing any sign of life on those days. So you've got to really have a system in place to assess the market, understand what your strategy is, take your strategy and then implement it rather than just randomly adding trades. You know, I've said this before, I'm not a fan of groupthink and collective stupidity. I really am not. And, you know, trading is the one area where, unfortunately, some people believe that having a group of 50,000 people sitting on a Discord server all looking at the wrong stuff, might be the recipe for success. I don't agree.
Crowds do some strange things.
Absolutely. I mean, I believe a lot of the stuff that you read in books, or, you know, you have people coming out like, oh, look at me, I made 12 million bucks this year. Okay, you started with 9. You know, it's easy to make 12 million if you had 9 to start with, right? You know, I don't think it's disingenuous to a lot of people. And I think a lot of people are suckered into the belief that there's this holy grail of an indicator that will tell you, you know, this is it. This is the pot at the end of the rainbow kind of stuff. And honestly, if there was one, it wouldn't be available to you as retail. That's the way I see it. What you've got to build is a process, and process is very much based on your personality. So, you know, what works for one won't work for another. There are multiple ways to win this game. And anyone who tells you that there's only one specific way to win hasn't been trading enough to realize that there's more than one. You know, you've just got to find what works for you. And that's the thing, the biggest learn for 2022 for people that are wanting to get involved in trading is believe yourself over someone else, you know, but have a system. You know, don't compare your results to others. You know, there's absolutely no value in looking at someone who's made $20 million in a year trading and saying, I want that, because next year he might lose 30, and now all of a sudden you think that,
there's no context behind those claims though,
there's no,
that's why I like the percentage, if you're going to talk about wins and loss percentages are way better than absolute dollar amounts.
Oh, for sure. I mean, we know from the work that we've done, the only thing that really counts is your ability to manage bullshit trades. Like that's the thing, because in a portfolio of 100 trades in a year, at least 60% are going to be rubbish. And how you manage those 60%, whether you let them all become 100% losses or whether you manage them quickly and get out, because you've got a system of rules that allow you to get out and realize it's broken, you will just be chasing your tail. And, it's sad, but that's the reality of trading. A lot of traders blow up their accounts, not because they did anything wrong. It's because they just didn't have the processes in place. They know how to put the trade in. They just don't know when to get out, or, when to take their profits, or when to not do a trade. This is the one game where less is more. So there are some really, really good traders in the public domain that put a lot of stuff out there, a lot of content out there, but they're hard to replicate. It's hard to copy those people. It's not worth trying to do it, because if you try and do it, you'll be disappointed. What's better is to see the process that they follow to identify the opportunity and how they manage it, and then customize it for yourself. There's a couple of books out there that tell you that one entry strategy is the be all and end all of everything. Take, for example, a simple moving average 813 crossover, right, on the day chart. You'll read a book on Amazon and it will tell you this is the holy grail, and they'll give you 9 examples of how this has worked 100%. And because of those 9 examples, it must mean that it works on everything, and it doesn't. And then you go and pick the wrong stock at the wrong
9
time.
trades isn't exactly a robust. 9 trades isn't exactly I said 9 trades isn't exactly a robust sample of all the trades that have been done.
Yeah, and this is where planning and putting yourself into a situation of knowing what to expect is going to make the world of difference to your trading. Just going in and getting onto a Discord server group, and some random person somewhere in the world says, hey guys, I'm looking at mom and pop deli shop or whatever it is, and everyone suddenly hops on the bandwagon. It's like these Wall Street bets things, right? It's like you don't really know who the person is that's putting it out there. You don't know why they're putting it out there. You don't know what their interest is in that idea. And if you just follow the idea, if you just go, oh, that must be good because someone else said it, and you have no faith in your own ability to apply your own process, the chances of you winning, it's just luck. That's gambling. That's gambling. But if you've got a system, if you've got a process that says, you know what, when this, and this all line up, I know from my back testing and from my research that this setup tends to work. Cool. When that setup happens, I'm going to do it. I mean, we do it a bit. I'll show you a little bit here. So this is one of the tools that we have. Let me use version 2 of the tool. Yeah. So here on Apple, for example, this is one of our planning tools that we have. I know that the setup here on Apple that I'm looking for, which is a 91421 reversal on a 1% risk with a 4R multiple, has a 68.75% win rate since 2018. So for 3 years, this has generated a really good win rate with a high profit factor. It doesn't generate a lot of trades. So I know it's not going to trigger a trade every day. And I know that the average duration of a trade is 21 days. So based on this data, I know that this entry signal that I got here is very profitable. Now, this trade alone, we also have tools that allow us to take profits during the trade and scale back into the trade. So our entry over here on the 21st of October, we've made about we're up about 400% or 500% here on this trade, knowing because of our data, right? We know exactly what it is we're trying to trade and what we will do with it, right? So rather than just inferring or assuming that a 813 EMA crossover is going to be the strategy to follow, we know what signal we're looking for, if we look here, if I add the 813 crossover, I've got a lower profit factor and a lower win rate. I also get slightly more trades. So I can choose which is the one that I want to do based on my strategy. And, that's how I trade, is I look for the one that's going to fit in the most with my personality, and off I go with it.
So
And
do you normally have, let's say, like say 3 or 4 different strategy setups on each
Yep.
stock, and that way you can do more trades if you want to?
Absolutely.
Yeah.
Yep, I've got that here. So here we have 6. These are our 6 majors that we follow. So TQQQ, SPXL, XLK, QLD, SOXL, and XLC. These are the 6 majors for me. I will buy shares. I will do everything on these. And you can see here, we've got a strategy up here for TQQQ. It only generates 25 trades over a period. It doesn't have a high percentage profitability, but it has a very high profit factor and a low drawdown. So I know that my volatility is not going to be too big on that trade. So I'm just waiting for a re-entry here. If I look at SPXL, it's got a high profit, a high win rate. Profit factor could be better. But remember, with these, what you'll be doing is combinations. This is just based on the equity trade. This is not based on the option trade. So if I've got an equity trade that's a valid signal, I can also add various option trades onto it and build a 9, 10, 12 position trade there.
So this would actually be a really good tool for people trading stocks as well.
Absolutely. I do it for stocks. I do it for options as well. But knowing the setup that you're looking for and knowing the frequency of trades and how long a trade is sets your expectation to how often you're going to trade. So if someone's going to be trading only on the day chart, you're not going to get a signal until the end of the day anyway. So your action will be the following day. And that takes you out of the market, prevents you from over trading. And that's a really powerful thing. But most importantly, knowing the accuracy of a signal. There's a reason why a lot of indicator vendors out there don't back test anything. There's a lot of reasons for it. But one of them is that if I tell you, I build a lot of my own indicators and I back test them because, I trade my own money, right? At the end of the day, I want to know that if I'm building something, it has to have a degree of success. But you have to ask yourself, why are the vendors who provide indicators don't provide back testing capability in their indicator? I've never understood. You would want to know if that signal has got a track record of being consistently profitable. Like I said at the beginning, a 9 trade back test is not going to tell you that something works. Like that to me is crazy. And it's the same thing in crypto, right? I'm busy building some things in the crypto space as well, because it's sometimes a lot easier to trade robotically on crypto than it is to trade robotically on equities. So I work with a lot of developers and we build boxes to do these trades. And we want these available for retail traders, because I think there's a big disconnect between the way institutions trade and the way retail traders trade. Institutions trade with machines. They don't trade with people. There are no people sitting there going, let's do this and that. They all plan them like this. And if you can have the tools or similar tools to how the big guys play, you'll get similar results to what the big guys are doing, right? So these are the kinds of tools that we have for our clients and our subscribers that help them plan their trades. It's more important to develop a skill in planning than it is to learn how to copy someone else's trades. Copying someone else's trades is not a winning strategy. It's not going to win over time.
So I have a question. I know you trade a lot on the day chart, but you like to enter on the intraday chart, like the 4-hour chart or something. What if you don't have the luxury of entering on the intraday chart and you're trading the day chart, entering on the day chart? How much of a difference is that going to make for your intraday?
It will make a difference. It will. The thing is, you're going to be trading the next day, right? So the issue that you always have is the element of gaps up and gaps down, right? So that's going to obviously change your results. The issue is you can't really trade to that number. Remember, this is historical, all right? This is not predictive. This is not telling you that the next 4 years it's going to be the same. The issue with back testing is you can't correlate. You can't really assume that what happened last week is going to happen next week. So if someone's trading the day chart, the way that I would do it, if they don't want to experience that huge volatility of potential risk to the gap up, trade the week chart with the day chart as a trigger, but use the week chart for your entry, right? So you go longer on the time frame, but you shorten the time frame on the indicator. So often what I've found is that if I change the indicator time frame relative to the chart that I'm trading, I will get different signals and different results. So if you're trading the day chart, use the weekly chart as your main strategy. You know, that's what I'm going to be trading, is that week. Remember, if you have a squeeze, for example, that fires off on that weekly chart, you're looking at 10 to 12 weeks of upward momentum, right? You're not going to get a weekly squeeze firing every week. It fires maybe 2 to 3 times a year. So the weekly chart
you would
take a lot of that out.
manage it on the weekly and then enter on the daily.
Look, if you're going to be trading options on the weekly chart, you can only really use leaps. So you've got to watch the pricing that you use to get in. But using the day chart to trigger it, let's play a game here. Let's open up the weekly chart here on Apple, and let's open up the day chart for the indicator, right? So we're going to change the indicator here to be on the daily. So we've got the daily using the indicator. And if I use the weekly chart for the entry, here we've had only 3 trades here based on the reversal indicator that we use that have never lost money over the last 3 years. They've been 100% successful, but they've only generated 3 trades. So you would have entered the trade, let's see, back in, so there was your last entry. No, there was your last entry and exit was here between 3rd of August and the 31st of August. So it doesn't generate a lot of signals, but that's not the point with this, right? You could also trade it a slightly different way. You could take off the reversal, use the moving average, bring that back down here, use the SMA, and we'll see the results that come up, right? So here you've got this one's only generated 13 trades in 3 years, but look at that. You won on more than 50%, but your profit factors, this is the key, is your 6 times profit factor, and your drawdown was tiny. The average duration of each trade was 11 weeks. So that was 3 months, right? So that's how you would plan. And you would just say, okay, I'm going to wait for the, so here you've got a signal that came in on the 25th of October. You've got some squeezes that are also allowing you to enter. If we say you're going to be adding in more trades, anytime you see a green column or a cluster of green columns, that's an appropriate time to add to your trade. So you would have entered here, you would have added more here, you could have added more here. You have a squeeze that's firing, you've got lower volatility, your B score is high. This would be a perfect time to be trading Apple. You know, here, you know, you could be buying some shares on Apple, using the weekly chart as your trigger, and then using your day charts to maybe add some option trades or vice versa. But it's knowing what you are doing and having a system tell you, that's the powerful stuff. And that would stop you from getting random trades and adding stuff and all of that. So it's really powerful. It's a powerful tool.
So where do you think, so you think the rally's already started then?
I think today could be the start. I would be a bit cautious because when you look at the put call ratio, I mean, I don't want to hop on one indicator. There are a lot of people that say this is all hocus pocus kind of stuff.
I was just curious. So on these market indicators, I know you use ticks, use the graph, use the German market. There's a lot of things. Is there any particular weight that you apply like to any of these? I mean, is there a certain, what do you think is the most, like, say, the top 3, if people are going to pick the top 3 things that would probably...
Well, the one indicator that I did build a while back, we call it the alpha score. Mm-hmm. Now the alpha score is a composite, and with the alpha score, it will come up here in a second. The alpha score is a composite that's weighted. It's got about 9 indicators that sit underneath that are in a weighted basis. And what this does is it's really a trend monitor. So you want to be long when it's green, short when it's red. It's hard to say if anything should have a higher weight than anything else, because it's all about impression, right? It's around your emotions as well, right? I'm a pretty relaxed kind of guy. You know, if I see red on the screen, I tend to do the ostrich stock management strategy, which is stick your head in the sand, i.e. turn off your computer, go downstairs, watch Netflix for an hour and come back later. That's how I manage.
That's what I did over the past few days on this drop. Is like I just kind of, you know, I realized that the season, and like I was looking at the charts, and I just kind of just didn't do anything. And I'm like,
yeah.
now that everything's rising from the dead, which is I exit a couple of positions, but I was like, well, I'm going to take some of this volatility and see what happens.
Yeah, it's I don't think anything has a higher weight than the other, right? It's almost like you got to you know, defocus a little bit, come out, look at the whole picture and see what the dominant color is. That's what I tend to do. I look at what the dominant color is on the screen. So if I look at my think or swim chart here for a second, you know, here at think or swim, if we look at that, the dominant color right here is red. If the dominant color is red, I don't really want to be doing much. When the dominant color becomes green, okay, now I can do things, right? So it's just a visual, you know, here it is, right? This is the state of the market. The only sector worth doing anything right now in the market is ITB. We've got a trade on in ITB. But look at all the trades that are bad, right? All of these sectors on here, SPY, consumer discretionary, all of these things, they're all below the 8-day moving average. So no one really should be going into these sectors unless you're willing to accept the short-term risk involved, right? The short-term risk is to the downside. So when you look at the market conditions, when I look at this sheet, right, these 8 graphs, it's really just a question of, you know, are the futures going up? Are the ticks above 1,000 or below 1,000? Is Germany going up or down? Are 10-year notes going up or down? Because if this is going down, then NASDAQ's going up, all right? And there might be high ticks, right? So if I've got the markets going up, the indexes are going up and ticks are sustainably above 1,000, that's very bullish, right? That's what we want to see. If I look at the VVIX, which is the volatility of volatility, and I mentioned this yesterday, it's like you're going to have the volatility of the volatility of volatility, and then, you know, someone will come out and go, the volatility of the volatility of the volatility of the volatility. This is a rabbit hole you don't want to get into.
It sounds like a lot of calculus. I want to stay away from that.
Sounds like a lot of guys have been smoking weed and coming up with all sorts of crazy ideas here. So, you know, I look at the volatility of volatility. Are the Bollinger Bands expanding to the upside, or are they coming down? If they're coming down, so we're seeing a big reduction now in volatility. This is one of the reasons I don't trade VIX, because these kinds of movements are dangerous for your portfolio. They are horrible for your portfolio. So, you know, we're going to see the Bollinger Band starting to come in. We're going to see the put-call ratio coming down. The market's going to be going up, and then it's going to reverse and do it all over again. So do I weight these? No, I just look at it and go, is the market condition overall, general, you know, conducive to me doing a trade? Yes or no? If it's yes, then I will trade. If it's no, I will just sit back and wait till it is. I'm not a fan. I'm a fan of the short side, but I'm not a fan in trying to time it. You know, often what happens is people time it at the worst possible times. They get nailed. You lose a lot more on the short side when you get it wrong, because those reversals that happen can be quite dangerous. So what you see is a lot of retail guys shorting in the hole. You know, once the stock market's down 2%, they start adding in, you know, their short positions, loading up for more movements to the downside. And then the market bounces, goes back, kicks them out. They lose money on both sides. It's crazy.
It's like chasing the trade on the upside too.
Yeah.
I mean, it seems
you've got to wait. I really believe this. You have to wait for the conditions that you have described in your trade plan to be fulfilled before you act. And that's the problem that most people have, is they don't have the discipline to sit back on their hands and go, okay, I will just wait for it, right? When you look at this Apple setup, right? We know the Apple setup is profitable, but it only will generate 22 trades over 3 years. So, you know, that's 5 to 6 trades a year. Okay, so if I know that I'm going to have 5 to 6 opportunities to trade something that historically has worked really well, wouldn't you rather just wait for those? And when those happen, you max out and you really load up on those, rather than trying to catch every single move that comes your way. It's just about being efficient as a trader, right? So
if you want to play it more more trades, then there's a lot of other stocks. You can-
Oh yeah, there's lots you can do.
There's plenty of other ones that probably might have a better setup than the one you're
You
trying
know,
to.
when you speak about that, right? When you look, these are the stocks I watch, right? You could take a stock like Netflix. We've taken the exact same setup that we had on Apple, and we've now applied it to Netflix, and you can see how different the results are. Let's look at Microsoft. Same setup, right? We're comparing stocks. We've kept the setup the same. That you'll see how different these numbers start coming out at, right? Let's look at NVIDIA. So you notice how different the numbers are. We've kept the setup exactly the same entry strategy, different stock. It doesn't, this is why you've got to know what you're willing to do and what you are trying to do, and then follow it, right? Look at Amazon. You would have to go through a loss percentage of 60%. You're going to lose 60% of the time on this setup. You're going to make some money, but you've got to be consistent, right? So in history, look how volatile this is. Would you be trading this strategy on Amazon? No, I wouldn't trade this one. I would probably trade, let's see, here on the day chart. You know, here you're going to win 1 out of every 2. You're going to get a profit factor of 2. It's a fairly high drawdown. You know, if you want to trade Amazon, this might be a strategy you want to follow. You know, here on Google, same setup, more profitable. So trading Google on that basis is a better trade than trading Amazon. But you've got to know this, right? You can't just randomly pick it. You have to know it. Sorry, I'm going to have a whole lot of alerts go off now. It's going to all buzz in. There we go.
All right.
You know,
Well, that's a good spot to wrap up, I think, Chris.
awesome.
Let you get on with your day.
Awesome. Oh man, now it's just going to be me clicking the screen because it's just this damn buzzer. It's like horrible. It's good to see you, my friend. I'll see you next Tuesday.
Absolutely. Take care, Chris.
All right. Take care, everyone. See you.